Hello everyone, my name is Moji. You're watching a Bitcoin Bubble news channel. Bitcoin, which is changing the way money works, is an alternative to standard banking that is decentralized, open and safe. As more people use it, the limited quantity could cause prices to rise. But for this possibility to work, it needs to stay decentralized. Bitcoin's unique value could be in danger if it becomes centralized. We must strongly defend its core principle of decentralization if we want to protect its future and fully achieve its potential. Walker, a podcaster, recently talked to Jeff Booth about how Bitcoin is safe and open. Jeff Booth talked about how he thinks Bitcoin could change the economy and how important it is to keep control of your own money and avoid threats of centralization. Booth said that everyone knows how important it is that Bitcoin is decentralized and safe. He said they are aware of threats, especially at Layer 2, where strikes could affect Layer 1. His statement was that Bitcoin's Layer 1 has been safe and open for 15 years, and it has become even more so over time. You can watch parts of the talk to learn more about what Jeff Booth said to Walker. If you want to see more videos like this, please like this one, subscribe to the channel, and turn on post alerts. Have fun with the movie. After that, there is a new system limited by energy that is open, decentralized, and safe. It is called Bitcoin, which forces the free market, and for the first time ever, you couldn't cheat that. As a result, all prices related to Bitcoin must always fall to the minimum cost of production. And every new person who spends time in that system adds their knowledge, ideas, and speed to the free market. This means that Bitcoin prices will either always fall against Bitcoin to the point where they are equal to the marginal cost of production, or they will tend to rise. That's how it would look. I also say that we've never had it if it stays autonomous and safe. If those things are true, then it's also true that we've always judged a system by its own standards, and we're now inside that system, judging it. It's also true that Bitcoin is hard to measure because since there isn't anything else to compare it to yet, you can also use it to judge other things. Bitcoin says that all prices will fall, which is what you would expect to happen. Prices for energy, homes, and everything else will fall. In 5,000 years, we have never had a currency that didn't give in to that kind of trickery. That means that we are all part of the thing. There needs to be something in the situation that lets the centralization happen. Since the beginning of time 5,000 years ago, many smart people knew the same things we do now, and all currencies have always been controlled by a central bank. You'd have to set a ridiculously high bar for the attacks that were going to happen on Bitcoin in order to understand why it would probably be controlled, and what would happen if it could be centralized. Throughout history, most people have fallen into the trap of pricing in the currency they're in and allowing that centralization, which means making trade-offs between the short and long term. If we haven't been able to get out of this trap before, what makes us think we will be able to do it now? That's how high I think Bitcoin is. This means that Bitcoin Layer 1 has been safe and decentralized for 15 years and is still getting safer and more decentralized. That doesn't mean there aren't still some risks. I'm not saying mining pools end, but I believe most people know what this means for all of us. And what they do is always in carefully looking for risks and fixing and becoming. In a way, that's kind of what you're doing with Bitcoin, right? You're always on the lookout for attack routes because once you get out of this crazy matrix, you realize how important decentralized insecurity is for everyone. Moving forward, I thought, okay, if I know everything I know, and there are a lot of smart people around, they must also know everything a few or 3 years ago. You also lost the first layer. Level 1 couldn't be choked off. It was impossible to stop. It went on and on. How could you stop Bitcoin at Layer 2 and then hit Layer 1 from Layer 2? And I believe we are still very far along the path to that happening. Jeff Booth talked about how Satoshi created Bitcoin's unique features through mining and proof of work, which let it reach escape velocity while keeping security and freedom. Booth thinks it will stay this way because important people like Matt Odell know how important it is and are working to stop centralization by making measures like the Ocean Protocol. Booth also said that Bitcoin, like gold, needs to be able to be used to buy and sell things in order to work as a source of value. If people only use Bitcoin to keep value, it could become fragmented and centralized, like the US dollar, which could cause problems with self-custody. This change could make Bitcoin less special and lower its price potential. To keep Bitcoin's worth going up, it's important to protect its decentralized nature. In the meantime, Ethereum. The gas fees for the second largest cryptocurrency by market value dropped to their lowest level in 5 years, which was a big deal in the cryptocurrency world. Gas fees, which are what users pay to do deals on the Ethereum network, fell more than 95% from their high point in March, when they were 83.1 gig away. Fees dropped as low as 0.6 gig away earlier this week. In recent years, low-priority transactions haven't cost much. There are a number of reasons for this sharp drop in gas prices. One main reason is that users in decentralized apps are moving to other blockchains, like Solana and Layer 2 solutions, that allow transfers to happen faster and cheaper. The much-anticipated Denken update to the Ethereum network also made it more efficient, which helped bring down gas fees. Two big changes were made to the Denken update in March. These changes affected how transactions are processed and verified on the Ethereum network. This made things run more smoothly and saved users money. In the past, Ryan Lee from Bitget Research has found a link between low Ethereum gas fees and price growth for Ethereum. He says that when fees drop a lot, it's usually a sign that prices have hit their lowest point. After that, prices usually go up strongly, especially when the economy is doing well and loan rates are lowered. Recently, lower fees have cut down on the amount of Ethereum that is burned, which has caused the total supply to rise. Nearly 16,000 ETH, worth around $42 million, have been added in the last few days. This means that Ethereum's supply could grow by around 0.7% this year. Even though the supply has gone up a little, the lower gas fees are usually seen as a good sign for Ethereum.